So, the essence of its financial plan is going to be report to you today. Okay, first, when you talk about financial plan, in the business plan, it is a section where you look at the viability of the business to the eye of the finance. Okay, and there are certain actions and points that you have to think ahead. Okay, first, we have to talk about source of funds. Under source of funds here, if you remember, most entrepreneur who start the business from beginning, they might have their own saving and they use that as part of the personal investment. Otherwise, they have got backup from family and friends. We also get some entrepreneur who can develop their work into something more tangible, such as they might get the prototype and then they can sell the idea to venture capital, to the angel, or get money from the governmental support in the forms of grant or from the bank in terms of loan. Many ways to look at this. We discussed that last week, okay? Also, under this section, you have to explain sort and then amount. And if you need something more in the future, you certainly can add that into your work. The second part, the sheet we need is on expenses. Well, it is important that you understand business expenses. That's two categories, broadly speaking. Okay, the startup expenses and operating expenses or operation. Okay, this will get you business up and running. And if this is something that you've done or you plan to do in the future, in the near future, to set up the business, it's a startup expenses. For example, and you need to buy furniture, if you need to pay for the registration, if you need to buy equipment, it is the down payment for the land that you use to establish the office. All of these is the expense. So you come up with details in terms of item and then the amount of money. Okay. The second type is operation expenses. So this is pretty much more of the cost of keeping your business running. If you think of the operation expenses, it could be based on the monthly kind of basics as well. That could include something fixed and you have to pay every month. For example, salaries of the staff, the rent, telecommunication bills, utilities, raw material, promotion or marketing costs, loan payment, maintenance, anything that you use to keep the business run. Okay. Once you have lit all of your operating expenses, the total will reflect the monthly cost of operating your business. Multiply this number by 6 and you have a 6-month estimate of your operating expenses. Adding this amount to your total startup expense list and you have a ballpark figure for your complete startup costs. Now you can begin to put together your financial statement for the business plan, okay, from looking at this expense. And here's example, as I mentioned, startup expense, you put that in table, you put them into the item and then you calculate the total. The same way you look for example, here talk about asset and funding, okay? I also prepared a template, as an Excel template for you. The next one is the income statement. Okay, the income statement. Here is a document that shows your revenue, expenses, and profit for a particular period. You can really, if you look at the example I share with you at e-learning, you find that indeed this is, for example, you look at the income statement as a snapshot of the business that show whether or not your business is profitable. That's the keyword, okay? And if you subtract expenses from your revenue to determine your profit or perhaps your loss as well, right? While established business normally produce an income statement each fiscal quarter or once each fiscal year for the purpose of the business plan, an income statement should be generated monthly for the first year. So you can learn from your example. That income equal total revenue minus total expense. Okay. And here is the example. You put revenue and then expenses and loss, and you can compare, to get the final. Okay, the cash flow. Okay, let's start from cash flow as the concept. The cash flow, it shows how cash is expected to flow in and out of your business. Okay, you need to manage your cash flow because at least if you can improve your cash flow, it's going to show that you've done something correctly. It's a good move, pretty much. When you think of cash flow management, you think of reasons such as how can we understand the whole operation process? How can we really understand where the money comes from, okay, in terms of customer? Okay, it's if you think in a layperson language, we're talking about cash flow as the amount of money, cash and non-cash, traveling into and out of the business. A positive cash flow perhaps refer to more money coming in than going out, which is a negative one. Okay. When you look at cash flow in the system for your business, you should like something like this: cash in and cash out, which refer to the item of product that you sell, cash in. And if there are any other quotes or revenue, you can add that into as well. Okay. On the other hand, the cash count is, the name said, it's out. So you use it to take out and then to operate, or you can find really a relationship between this and the previous section. And this is the way. Okay. Balance sheet is another important aspect here, where we sort of keep the book and we find out that balance sheet really give a statement of a business asset, liability, and shareholder equity at a specific point of time. Okay. I think it's important that you be sure on your balance sheet. Okay, many ways, looking at the data, the way you obtain the data, and if there are any other barriers. Okay. Here, the example of balance sheet. Okay, if you look at the asset, such as current asset, property and equipment, other assets. Okay. At the same time, you can look at the liability and shareholder equity if you do have it. Okay. And the last part under this section, under the balance sheet, is the shareholder equity, which is dependent upon industry. Okay.